Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. Today is Tuesday, August 27th, 2019, and we again find ourselves in the last trading hour of the market. I mention this every day, but in my opinion, the prices that are as close as you can get to the close are the most valid prices to make your buying and selling decision from. The prices during the day are controlled by algorithms. There's a lot of noise. At the end of the day, the market makers, the large financial institutions come into the market, take control of the market, and again, in my opinion, move the price to where it should be for the day. And that is why I make my buying and selling decisions based upon those prices instead of intraday prices. So anyway, thank you everybody for coming today. I appreciate it. I appreciate you spending your time with me and investing your time with me. And I hope you're getting a return on your investment by following this channel. You know, I started this channel because I wanted to share with everyone what I've learned over the last 24 years as being a professional stock trader and money manager. And I've seen a lot of people in the trading world have a really difficult time, affecting their personal lives, their financial lives, their family lives by not using good trading principles. And so I thought, I'm going to start this channel and share with people what I've learned, and hopefully it will help. So I'm hoping that it helps. Currently, we are down 41 points on the Dow. We are down about 8 points on the NASDAQ. And we are down 1.42 points on the S&P. So we did open up higher earlier and then sold off. I'm glad the podcast is working today. I had an issue with the links from YouTube, and it was showing that the video was unavailable. And so I was working on it for like the last 3 hours. I didn't think we'd even have the show today. And just to point out how good my tech guy is, when I finally couldn't do it, I called him on the phone and explained to him what was happening. I hit the refresh button and it started to work. So he is that good. All I have to do is call him and it automatically fixes itself. Hey, William, how you doing? Good to see you, my friend. Hope you're doing well. Hope Cooper's doing well too. My little golden doodle is heading to Hawaii on next Sunday. So it's sad. I'll tell you what, don't babysit a puppy for 2 months because it is very hard to let them go. So, yeah, it's sad that she's leaving on Sunday. I'm so attached to her and so used to her now, and then she's gonna go. But oh well, I guess that's what happens when you do a favor, right? It was a good favor for them. So hey, Roy B, how you doing? Good to see you. Thank you for coming by today. Appreciate it. So anyway, all right. Well, listen. So the format for today, as usual, first thing we're going to do is we're going to go ahead. We're going to run the U.S. legal disclaimer. Going to come back. We're going to take a look at all my current positions. I'm going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward. After that, we're going to do just a few minutes on trader psychology. And then after that, we're going to go through my entire watch list. We're going to go through each stock one by one. We're going to take a look at the technicals, and we're going to look for a combination of technicals, hopefully to have a confluence together. The way I look at technicals, everybody, is, when I look at moving averages, I look at RSI, I look at MACD, I look at ATR channels. I look at those technicals as potential groups of buyers coming into the market. And so if you want something to go up, you want to buy it when other buyers are going to be there, right? It just makes sense. You don't want to be trying to buy something when you have groups of sellers coming in. So the best trades, in my opinion, are the trades where you have a combination of indicators lining up, aka a combination of buyers lining up. So hope that makes sense. And then after the market closes, if anyone has any questions whatsoever, please let me know. If I wasn't clear on something, let me know and I will try to clarify it. If you'd like me to take a look at any particular stocks, I'm happy to do that as well. Or if you just have some kind of trading issue you're dealing with, please let me know and let's see if we can talk through it and help you out. So all right, well, that is the plan for today. So I'm going to run the U.S. legal disclaimer. Please hang on. It's about 40 seconds, and I'll be right back. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Thanks for hanging through me with that. William says we're doing great. Oh, good to hear. Good to hear. All right. Well, first of all, let's go ahead and take a look at my current positions. We'll talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward. So, all right. Let me just make sure. Yeah. All right. So I did buy Amazon. I did buy Amazon yesterday on the 26th of August. The reason why I bought it is the previous day we closed below the 200. Yesterday we closed back above the 200. This is a good back-tested approach to trading Amazon. It's a mechanical approach. For some people, I use the close under the 200 and back over as my entry, but I'm not going to trade this completely mechanical. This will be a discretionary trade. But the point here is the close under the 200 and then close back over the 200. If it closes under the 200 today, I'm going to go ahead and I'm just going to get out, right? And that's the key to profitable trading. If you have losses, just get out quickly. You can always go back in if it closes back above the 200, but this back tests well as far as being in the position, staying in the position over the 200. If you're wrong and it closes under, getting out. And we talked about groups of buyers. There should be groups of buyers here at the 200 day. If it closes under the 200 day, it shows that those buyers were not strong enough to hold it, which is bearish. But as long as it closes above the 200 in this particular trade, because it's a discretionary trade, I will continue to just phase out until I hit the 50 RSI. If we reject the 50 RSI, I'll go ahead and just get out. My ultimate profit target on this trade is up here at the 50-day moving average, and so I will phase out. If I get up to here, I will run out of shares. But today it was under the 200-day. Currently, it is above the 200-day. So as long as it stays there, I'm going to keep it. So today, our line in the sand is 1758.41. That is the 200-day. So as long as we stay above 17, this is going to change a little bit by pennies as the price moves. But as long as basically we stay above the 200, as long as we stay above the 1758.41, I will continue to stay in this trade. Keep an open mind if it goes to the upside. Get out quickly if it goes below. DDM. So as with Amazon, we had a close under the 200 and a close back over the 200. Now this is a mechanical trade. I'm going to stay in this trade as long as we stay above the 200. So 2 days ago we had a close below the 200. Yesterday we closed back above the 200. As long as this stays above the 200, I will continue to stay in, and because this is mechanical, I will just continue to stay in until I'm either out of shares or it closes back below the 200. You can see today we did test the 200 intraday already. So that is a good sign that we tested it and bounced off it today. Slightly in the money on this trade, which is a good thing. So that's the plan. Staying in and phase out until I'm out of shares if it keeps above the 200, or go ahead, just get out under the 200. All right, back to the famous SPY trade. So as you know, I do buy the SPY every day at the end of the day, every day, and I sell it every day, first thing the next morning. So why would I do that? It doesn't seem like it's very technical. It doesn't take into consideration technical levels or support and resistance. It's just something I do every day. Well, it's based upon a back test. This is from Lizanne Saunders at Bespoke Invest on Twitter, but you have two options here in this particular back test. The first one is that you could buy the SPY at the open each day in the morning and sell it at the close in the afternoon each day. If you did this every day since 1993, you'd have actually had a negative 13.9% return. But if you did the opposite and you bought the SPY at the close each day, sold it at the next open the next morning, you'd have actually returned 634.2%. And this is what I do. So I buy the SPY each day at the close, sell it first thing in the morning. And you can see from the results here, it has a clear edge. It's not straight up. There's ups and downs as with any trading approach. Even if you have an edge, it's just random distribution with the long-term edge. So the key here with this approach and with every trading approach is, you have to stay in this for the long term. You have to let the edge play out. And in the short term, there's going to be ups, there's going to be downs. It doesn't mean that the edge doesn't work in the trade. It just means in the current time, it's not working for you. But you can see in the long run, it does work. So the key is with all trading, everybody, take the long view as a trader. Don't think I have to make this much this week or this month or this year. Just take your signals, position size correctly, get out quickly if you're wrong, be open-minded if you're right and it's moving up, and just rinse and repeat. Take the trade, identify your risk, get out when you're supposed to, be open-minded when it moves your way, and let the edge play out for you. So I get a lot of people ask me, how much do you buy this? I buy 10% position size. So if I had $100,000 in my account, I would buy $10,000 worth of SPY each afternoon, sell it first thing in the morning. So with that being said, I did buy it yesterday here at 288 and sold it for a nice profit today at 289.60. And you can see it had the overnight gap and then it got sold into first thing in the morning. So anyway, nice trade. We had a nice profitable trade the day before too. We bought this bottom, sold here. Yesterday we bought here, sold here, and I will be buying that again at the end of the day. So hope that makes sense. Hey Frederick, how you doing, buddy? Good to see you. All right, so let's get on to my option trades. I did sell an option here on the VIX back on August 21st. As long as the prices stayed above 23.50, which was my strike price, I will be able to keep the full premium on this trade. I did get out today near the top today when I had 80% of my premium, so this was a nice trade. It expired September 20th, but it had such a big move here. I have 80% of the premium already, so I don't want to have to wait around until September 20th to get just that extra 20%. It doesn't provide a good risk to reward at that point. So I did lock in profits today on VXX. So that was a good trade. The Qs, I did also sell an option on the Qs down here to 169. So as long as the price stays above 169 by September 20th, I'll be able to keep the entire premium. And you might ask yourself, why did you pick the 169 price? So when I sell an option, I like to see the strike price have some kind of support or some kind of technical level on 3 time frames. So on the monthly, I chose the 169 because it has the 20-month moving average above it. This should act as some type of support here. On the weekly, the 169 price has the 100-week moving average above it as support, and it's kind of close and near to the third ATR channel. And it's very difficult to get indexes above or below the third ATR channel, especially on the weekly. Doesn't mean it can't happen, right? But you can see here, that was about the end. Here, that was about the end of at the top. So I feel pretty comfortable selling the put down to the 169 price. And then on the daily, that 169 price is down here, actually under 30 RSI, but I liked it because we were getting close to the sixth ATR channel, which is difficult to get past the sixth ATR channel. So anyway, this one's moving nicely. It's been profitable, so this one's just kind of a waiting game, and you hope that this stays above here. Now, if it closed below 169, regardless of when it happened, I would have to get out of the trade, which leads me into Philip Morris. So look at this trade, everybody. You know, going into the year, so far this year, I've made money on about 95% of my options. Not so on this one today. This one was a big hit. There was some big news about Philip Morris and Altria merging together. Obviously, the market did not like that. So I did sell this back here on the 23rd of August. I picked the 72.50 price because on the monthly, had the 100-month moving average above it, was close to the the -1 ATR channel below. Also, this particular range right here had held support for a long time. We had that, you know, in 18, in the last quarter of 18, it dumped with the rest of the market, but the general price of the market had stayed in this range. On the daily, that price on, let's take a look here. Oh yeah. We were such a low RSI on the daily, but you can see, look, I sold it here. The price need to stay above 72.50, but today we are now under the 72.50 price. So I have to get rid of this stock or this option. I have to take the loss on this stop. And I'll tell you, you know, just from a personal standpoint here, it's the last thing that I want to do, right, is go ahead and lock in a loss on this stock. It's the last thing, right? I mean, I got newsed, right, with the big merger. Wasn't expecting that, but this is, you know, a good example of what happens. So, you know, like I said, from a personal standpoint, I do not want to get out of this trade. Every fiber in my body saying, okay, it's low enough, might as well just keep it. But that's not the plan, everybody. The plan is the 72.50. If it closes underneath there, I have to get out. And so I have to get out. I don't want to do it. And I'm sure you guys can identify, you know, with the feeling when you buy a stock and something goes against you in a big way. You start thinking, well, it's probably low enough. It probably can't go any further anymore, but it can, right? It certainly can. So, you know, when you sell puts, there's a lot of times where you feel like, man, I have 12% protection below. Yeah, you do. And most of the time it's going to hold, but sometimes it's not going to hold, right? And so it's important to position size. Even if you have a lot of protection below you, it's important to position size correctly. This is just a 10% position size. Yeah, this hurts. It cuts into my profits a little bit on my options for this year, but those things happen. So as long as this closes under 72.50 today, I have to go ahead and just take the profit. But you know, it is a good example of when something goes against you, you get punched in the face, you don't want to get out, you think the move is enough, but you have to follow your rules. So I will be following my rules as long as this stays under 72.50 for today. All right. Hey, Steve Burns, how you doing? Good to see you, my friend. Honor to have you here as always. Thank you. Greg says, hey, Greg, pretty dull market. It is a pretty dull market today. It is a pretty dull market for sure. It's been a crazy week. It's been crazy trading. So Mount Doji, hey buddy, how you doing? Good to see you. Thanks for coming by. Mount Doji says, agreed about the dull market. I charted an altcoin today. Oh, yeah, Steve Burns, except for metals. Metals have gone crazy. So Let's take a look here. All right. So listen, you guys know I like to do a little bit on trader psychology each day. I think it's the most important part of your trading, learning the fundamentals and the technical levels. It's an important part, but in my opinion, it's probably 10 to 20% of it, right? It's not that hard to figure out the support and resistance levels, but the most important part of trading, everybody, is the psychology, just like I just mentioned about Philip Morris, right? Every fiber in my body wants to stay in it. I have to overcome that. And that's a skill, right? It's a skill to overcome your emotions, the fear and the greed and the FOMO, all that kind of stuff. And so that's why I always talk about trader psychology and why it's so important. So this is Mark Minervini. I'm sure most of you are aware of him. He's very famous, at Mark Minervini. He has great information on his Twitter. I would suggest that you subscribe to him on Twitter, read his posts. But, when I read this post, you guys know that I talk about this a lot. And so I just wanted to go over it again. But Mark says, when you learn to cut your losses and fail small, you stay in the game. If you get to keep playing, sooner or later, you're going to succeed. The people who lose the game are the ones who rarely fail, but eventually fail so big that they don't get a play again, right? And that goes back to, position sizing. In my opinion, position sizing is the most important part, because if you position size conservatively, if you position size small, and at the same time, if you're wrong, cut those losses, you're going to have small losses, and it's going to keep you in the game. And trading is a skill, and the only way to acquire a skill is to do some type of activity or do what you're doing over and over and over, gain experience, gain the skill. But the only way that you're going to be able to do that over a long term is position size correctly, so that if you run into a drawdown, you can stay in the game and keep developing your skill, right? But if you bet too big, you run into a bad drawdown, then you're out of the game, you have a huge loss, and you cannot continue to trade. You don't acquire and develop your skill. So when you learn to cut your losses and fail small, you stay in the game. And failing small means cutting your losses quickly and position sizing conservatively so those losses are small. If you keep playing, and if you have small losses, you will keep playing, sooner or later you're going to succeed. The people who lose the game are the ones who rarely fail, but eventually fail so big that they don't get to play again. And those are the people that hold on to big losses, and then they come back, right? And then they're like, aha, see, I didn't have to sell. I didn't have to hit my stop loss because it came back. Well, a lot of times that's going to work. But there's going to be those times where it does not work, and they are not going to lose small. They are going to lose huge on those particular trades, and they won't be able to play again. So anyway, thank you, Mark. Appreciate you posting this. I thought this was helpful for people, so hope this makes sense to everybody. Steve Burns says, you have to eliminate the risk of ruin through position sizing and stop losses, or you eventually go to zero. Yeah, I mean, the more I do this, the more I realize position size is the key to everything. I mean, you have control over two things: when you buy or sell something, or what the position size is. After that, you have no control whatsoever. You can have something happen like Philip Morris. You can have a Trump tweet. You can have anything. So, take advantage of what you do have control of, and that is when you buy, right? Being patient, waiting for your setup, but the only other thing you have control over is your position size. So again, take the long view, everybody. Take the long view about what's my account going to be in 10 years, not about, man, I need to make the money by the end of the week or in the next couple days or make this money back. Please don't think like that. If you position size correctly, take the long view, you're going to stay in the game, you're going to get better at it, you're going to let your edge play out for you, and money will accumulate if you do that. Okie dokie. Let's take a look here. All right. Well, let's go through the watch list here and see if there's anything interesting for today. All right, here is Apple. So, on a lot of these charts, we're going to see Friday's big down bar. And again, when you have a bar that's larger than one ATR, here's an ATR from here to here, here to here. Whenever you have one ATR, that's expected. That's expected range based upon what has been going on recently. But when you get a bar that is larger than one ATR, right, that means there's a lot of supply. There was a lot of selling coming in to make this bar larger than one average true range. Yesterday, we rallied about to the halfway mark. And when you get a big down bar like this, it doesn't surprise me at all to get the price to get back to the halfway of this bar, the Fibonacci point, the 50% Fibonacci point. And if you guys remember from yesterday, I said I'm concerned about us getting up to the 50% mark. Did open up higher, but now today it looks like we're losing this 50% mark. So is there anything on Apple today? I want to see the bars narrow. It did narrow yesterday, narrowing a little bit here compared to here. It's still about 1 ATR, but I would really need to see Apple move sideways, consolidate, show that the selling pressure is abating, and then look for a false breakout to the downside and a reversal back up, which is what we call a V1 or V2. And if anybody's new to the channel, I talk a lot about V1s and V2s. Go to the description of this video. I have 4 lessons there. They're on YouTube. They're totally free. But one of the lessons is about V1s and V2s, and it's an important lesson because we use V1s, V2s as our entry trigger all the time. So if you get a chance, watch that video. If you have any questions, please let me know. So nothing on Apple today. Adobe is holding that 100-day upward moving average. It looks like we have a MACD cross here. I mean, that is positive. On the negative side, we have not been able to get above the 50 RSI. I do like Adobe in the fact that if you look at this on a monthly chart, this is certainly in an uptrend, right? There is no doubt this is in an uptrend. And this is the triple screen trading. This is what I learned from Dr. Elder, but this is a big component of his trading. It uses 3 time frames. The monthly, well, I use the monthly, weekly, and daily. You can do it on any time frame, but the large month here, or the large time frame is the monthly with an uptrend. The weekly has now come down into the value zone. So that's just a regular dip that's going to happen from the larger time frame, right? So the monthly is an uptrend. The weekly is in the value zone. So that is good. But then you want to go to the fastest time frame and you want to look for an entry. I don't quite see an entry here, everybody. I mean, you could buy this over the 100-day and just use that as a 100-day, stay in as long as it's above or get out underneath. I don't want to do that here. I don't like that it rejected the 20-day moving average, and I don't like that it has not got above the 50 RSI yet. So those are concerning to me. I think we need to be patient and wait for a better setup. Silver. Whoa, look at this, everybody. This is unbelievable. Unbelievable. We are well above the third ATR channel. We're at a 75.51 RSI. Can I buy here? No, I cannot. It's just too high for me to buy. Actually, anywhere in here was too high for me to buy. I like to buy in the value zone. This gives you the best ease of movement in the value zone up to the third ATR channel, in the value zone down to the negative third ATR channel. But that does not mean that prices still can't take off, and they went skyrocketing today. Look at the strength of the MACD here. So nothing on AGQ here today. I'm sure a lot of people got tempted to short up in this range, up at the third ATR channel. I'm sure they got tempted and they got obliviated today. So, on silver, if we want to get back in silver, we need this to come back into a reasonable area down back here into the value zone, have some mean reversion back to the value zone, and then look for a V1, V2 entry, or the 5-day crossing back under the 20-day and then crossing back over, that would be another entry. We took that same entry here where the 5 was under the 20. We took it when the 5 crossed over the 20, and we had a nice big chunk. We phased out all the way to here, but I have not been in there. It didn't allow me any new entry signals, right? Sometimes that happens. Things just keep moving up. You don't get an entry signal, and that's just how it goes. But nothing on silver today. If anybody has silver, let's see. Oh, I had an order in there. All right, let's take care of that then. Sorry, that caught me off guard there. Okay. Are we good? I think we're good. Sorry about that, everybody. Yeah, we're good. All right. Hey, Murat's here. How you doing, Murat? Good to see you, my friend. Murat says, on Friday, if we see a large silver short position on COT report from Chicago, I won't be surprised. Somebody is selling the silver. Well, it's getting pretty high. I mean, and if you look at this, on the weekly, it even made it up through the 200-day or the 200-week moving average. So, yeah, this is unbelievable. That's unbelievable on silver. All right. Okay. All right. Advanced micro devices. Nothing on advanced micro devices here whatsoever. 45.42 RSI. Looks like we're closing lower than the open. It is holding support here at the 100-day moving average. So nothing there. You know, this was a trade. This was a bad trade where I had this V2, higher low V2. Next day it went up a little, and then it just dumped on us. That was on the huge day that we had on Friday. And I ended up hitting my emergency 5% stop. So, you know, I have two types of stops. I have a end of day stop, which is about 99% of the time I'll use an end of day stop. But if you have a big, huge down day against you, you can't wait until the end of the day to get out of your market. And I use a 5% for my entry. So that is right about here is where I got out. So that was a bad trade. Amazon we're going to be eyeing that 200-day moving average. If we're wrong, we're just going to be wrong small and just get on with life, right? And if it closes back above, then we'll have another chance to get in it. But we'll have to watch this at the end of the day here and see if it closes under the 200-day. Boeing had that huge move up underneath the 200-day moving average, so nothing on Boeing. Alibaba, you know, we had this big move up on Alibaba. We came back into the value zone. We are starting to move sideways. So, you know, this is a good sign. This is what I like to see. I like to see a move up. I like to see a move back down. This bar is no good, but now we're starting to hold a little bit. So if we can move sideways a little bit more, get a false break to the downside and reversal back up, that would be good, right? Especially meaning that the 200-day moving average is sitting right there also. So nothing on Alibaba today, but 2 of the 3 boxes are checked. We made a higher high. We came into the value zone. That is box number 1. Criteria number 1. Criteria number 2 is that we stop going down. That's exactly what happened. We have stopped going down. Requirement number 3 is we need a false break to the downside and reversal back up. So nothing on Alibaba today, but we'll have to watch that in the future. Caterpillar down today, 3110 RSI. It is holding that 30, very low 30 RSI level. No double bottom. Well, we have a double bottom, but we don't have a bullish divergence, so nothing on Caterpillar today. DDM, we did buy that yesterday. As long as it stays above the 200-day, we will keep this. If we're wrong, we'll be wrong small if it closes below. If we're right, we keep an open mind, and you know, if it starts moving our way. Walt Disney, nothing on Walt Disney. Yeah, nothing here. We're under 50 RSI. We rejected the 100-day moving average. That is all bearish. Oh, I have to put in this order here before I forget. If you do market on close orders, everybody, you have to do them 15 minutes before the market closes. So I'm glad I just remembered that. All right, those are in. All right. Etsy down a little bit today. Nothing on Etsy. Ford has lost that 200-day. The longer it stays under 200-day, the worse indication that is, in my opinion. So nothing on Ford. Facebook bucking the trend today. But nothing on Facebook here. Five below. Well, we had quite the rally. We have come back down into the value zone, but really no signal. Looks like we have earnings tomorrow, so we couldn't get involved with that even if we wanted to. Gold, big day today. Right up against that third ATR channel. Do want to point out here though, see how we have this high, then see how we had a pullback. Now we've made a higher high. See the strength of these bars, the MACD bars here. This shows a lot of strong momentum. This second rally, see how shallow the bars are? That does not show good momentum. So this is what Dr. Elder would call a double top with a bearish divergence. We also have we also have an RSI divergence. See how we're this high up here? See how high the RSI readings are? Now we're higher and the RSI reading is lower. So that's also a bearish indication. Doesn't mean you just jump in and short. It doesn't mean that, but just in the big picture, it's starting to look bearish. So you would have to have some kind of trigger. I mean, what would be the trigger? Well, for me, if I were to short this, and I'm not going to, you know, maybe a move up above the third ATR channel and then back below, a move up above the 70 and then down below, that something like that. But I'm not going to short gold. For me to get interested in gold again, I'd have to have it move back into the value zone, move sideways, have a V1, V2, or have the 5-day EMA cross under the 20-day EMA and then back over. We have this exact same trade back here. 5-day was under the 20. Now the 5-day moved over the 20 and we had this nice trade. We phased out up into there, but nothing on gold today. Google has just been very range bound here. We've lost the 50 RSI. We're still in the middle of this big Friday day, which does not surprise me. So really nothing on Google today at all. Goldman Sachs. Nothing to see on Goldman Sachs here. In order for me to get interested in Goldman Sachs, I'd have to close under the 200, back over the 200, or possibly testing the 30 RSI, rejecting it, closing back above. That would also be another possible entry point for me on Goldman Sachs. But we're kind of in purgatory here. There's really nothing going on. IBB, it's just been a hot mess. Nothing on IBB. The next back tested approach on IBB would be the 5 closing back over the 30. That is a quantified back tested approach to selling biotech, but nothing on biotech today. Intel, we're really having a problem with Friday's bar. I mean, look at the volume on Friday's bar. Unbelievably horrible on Friday's bar to the downside. So I'm not surprised at all we're having an issue trying to rally back above that. So nothing on Intel. The Russell getting whooped up again today. I do want to point out here that we are working on the beginnings of a double bottom with a bullish divergence. Here we have a low. You can see the momentum bars, the strength of the momentum bars, very strong. We had a rally. Now we've come back even lower. But you see how these bars here are shallow, more shallow than this. This means this move down here, even though it doesn't look like it, from a MACD standpoint, had less momentum to the downside. So, it's this is a bullish setup, but you need some kind of entry point. Now, could you use a test of this previous low and close back above? You could, but it's not good enough for me. So nothing on the Russell. Johnson & Johnson had some news with some lawsuit. Much higher earlier today. We've given this back. This is what Dr. Elder calls a kangaroo tail to the downside. Not extremely bullish. I mean, we are up on the day, but we were up much higher and it got sold into. So nothing on Johnson & Johnson. Coca-Cola is up a little bit today. Nothing there. Lockheed Martin holding up pretty well, nothing there. Again, we have this big down Friday bar on the huge volume. The volume since then has been pretty anemic if you see down there. MasterCard up a touch today, but still battling with the 50% of this bar here, of the big down bar here. So nothing there. Nothing on Merck today either. Microsoft bucking the trend, but we're still inside this range here. So nothing on Microsoft either. Netflix down pretty substantially today. We're starting to work on some bullish divergences here. You can see this move down here, how deep the bars were. We did have a rally. We came back, made a lower low on less momentum. We've rallied here, but there was no signal to get back in. If we had a V2 tomorrow, here's day 1, here's day 2. Day 2 washes out day 1. Day 3 closes back up in here, confirms a V2, and also close back up into the range. That would be interesting, especially considering that we have a double bottom with a bullish divergence recently behind this. But again, nothing today. If we went down, tested the 30 RSI, closed back above, that might be interesting as well. Nike holding above the 200, but it's been below and above and below and above the 200 for a long time here. So I don't see. I mean, we do have positive MACD. We are above the 200-day. I mean, it's better than some, I can tell you that. But it's a 48.07 RSI, meaning that if we get up to the 50 RSI, we're probably going to run into some resistance. So right now we're just kind of range bound on a lot of stocks. Philip Morris, I talked about that. I'm going to have to get out of this because it's closing under the 72.50 mark. I got out of it right before the podcast because it was underneath. So yeah, this one whooped me up on my puts, but it was a small position size, right? So that really helps. And don't get lured into selling puts thinking that you have all of this protection below you, because most of the time it does work for you, but sometimes you will run into news like we did on this one. And like I said, every fiber in my body did not want to get out of this trade. I did not want to get out of this trade. We're very low RSI. We're near the 6 ATR channel. But again, the skill in trading is adhering to your plan and battling and defeating those emotions that you have of like, it's too low now to get out. I have to take a loss on this, right? Live to fight another day, everybody, right? Live to fight another day. Take your loss, just move on. There's going to be a lot of other trades that are going to come along that are going to work. Don't get into a trade. This might go down to, what's it, 71, 72. Maybe it goes down to 66, right? If you make a determination that this is as low as it's going to go, then what happens when it goes lower, right? Then it's lower. Then you think, well, it can't go lower than that. That's a trap. Don't get involved in the trap. Just please, everybody, when you have your plan, just please follow it. It's going to make the difference between whether or not you're going to be successful in this game or not. PayPal. Moving sideways. Nothing on PayPal. The Qs, as you guys know, I have a put down here at 169 on the Qs, so this is moving our way, but nothing there today as far as a directional trade. Snapchat having a big day down, nothing there today. I would be looking for a 30 RSI as a possible entry point, but nothing here. I do want to point out though, I did take this V2 here. Here's day 1, day 2, day 3, day 2, washed out day 1, day 3, closed above day 1, rejected the -1 ATR channel. I bought it here after a couple days here. It was not working. And when you have a good V1 or V2, it should immediately work within a day or so. But, in this case, this is called the time stop, right? It didn't hit my stop at all, but I just did not like how it was reacting. Next day it went up and then down, but you can see if the V1s, V2s don't work almost immediately within a day or two, I usually just get out. And you can see it was a good idea to get out, because if I would have stayed in that, I would have got beaten up. S&P, we did hit that profit target at the open today, and we will be buying this again today at the close. Square, nothing on Square. SSO is double leveraged. S&P, nothing there. Bonds, up again today, strong. Money is going into safe haven assets, so nothing on TLT today. Tesla, nothing on Tesla. Twitter is bucking the trend. Good job, Murat. So that is up today. Glad to see that up for you, but nothing as far as a new buy. UNG, natural gas, nothing there. United Healthcare Group. I was talking, guys, when we had this sidewards movement, right? And I said, this is most likely going to break out strongly one way or the other. We just don't know what direction, and we don't know when. I did mention this was probably the possibility of the start because of the high volume and the break of that previous range. And that was right. I did not take the short on this trade. Obviously, that would have been a good idea. We're at a 26.25 RSI, so nothing on that today. Oil up today a little bit, but I don't see anything there. Power shares, which is the US dollar index, again, the big day down. We're stuck in about the halfway of that mark. The VIX, I exited the puts today for a profit on the VIX, 80% of my premium, so I'm no longer in that trade. Verizon had a big day today, gapped up, not sure why, but nothing there. Walmart up today, so it's showing some strength. Did have a V2 yesterday, but I couldn't take it. It was too high up above the -1 ATR channel, so nothing there. Energy Select, 33.27 RSI. I would be interested in energy if we could go in the coming days, go under the 30, test that, back over the 30. That would be a good risk to reward ratio, but nothing there. Financials, nothing there. Real estate, nothing there either. Utilities up today. Healthcare under the 200, and pharmaceuticals getting beat up here. So I do not see anything again today, but you know, it's good, right? If you don't see anything, be patient, sit on your hands and don't do anything. Don't feel like you have to try to make something happen each day. If there's nothing to happen, just don't make it. If you're standing at the batter's box, you know, somebody throws a pitch that's way outside, then don't swing at it, right? You know, that's the key in trading is, you know, I think Warren Buffett said there's no 3 strikes rule in trading, meaning, or in the market, meaning you can sit and wait and sit on your hands as long as you want to, and you're not going to get struck out, right? So let's just wait. Let's wait till we get a setup before we take anything. All right, so let's look at our current positions here. Amazon is going to be close. Amazon's at 1757. Let's see, 1758.40. So with a close under 1758.40, we've got to get out. So that one looks like it's going to be a photo finish. We're going to just have to watch that one carefully. DDM does look like it's hanging above the 200, in which case we will keep it. S&P, we will buy that at the end of the day. So I don't see anything today other than managing our Amazon and DDM trade, which are going to be close. Let me just take a look here. So we have about 7 minutes. Murray says somebody's selling silver. Morgan Stanley has extreme physical silver position. Now they managed to get everyone excited about it. Let's see what happens. Yeah, Morgan Stanley has been well known for keeping the price of silver down and shorting silver. Yep, you're 100% right, Murray. I'm sorry, JP Morgan, you're right. I saw Morgan Stanley, that's why I said it. But yes, JP Morgan. If you search the JP Morgan cornering silver market, you can see their position. Yep. I've actually listened to quite a few podcasts on that. Frederick says, Greg, is it tougher for you to trade or is it the same as usual? I am just wondering. Yeah, it's been tougher to trade, certainly, in this market, right? We just haven't had the setups. We haven't had the setups, and the setups that we have had just haven't worked. So, you know, now we have to, you switch gears in trading. You switch gears into buying dips that go back up. Then you switch gears into larger dip buys, and then sometimes those work. But right now is just one of those situations right here where nothing's really working. So the only thing you can do is just follow your rules and just ride the bucking bronco up and down and up and down. And that's just part of trading. You don't always make money, but yes, it's definitely been more difficult trading. Is that what you're saying, Frederick? Or are you asking if like I'm having a difficult time like mechanically trading, like with my technology and stuff like that? Is that what you mean? Murat says the second peak in bonds looked very weak compared to the previous one. What do you think? Yeah, when I just talked about bonds, Murat, I was thinking that exact same thing, and let me show you why. I talk about divergences, RSI divergences. I talk about MACD divergences. Well, if we come back up and we challenge this high, do you see how here's the 6 ATR channel. This was probably at the 8 ATR channel. If we get back up here, look where we'll be. We'll be at a 4 ATR channel if this happens tomorrow, where the previous high was at an 8 ATR channel. So that's an ATR divergence. These divergences basically show that the second move does not have the oomph, does not have the power that the first one did. And the implication there is that it's running out of movement. And if you run out of movement, the thinking is that it's more likely to go back the other way than to continue to go up. Let's take a look at the weekly. I mean, yeah, I mean, we're right there at the 6th ATR channel on the weekly. That does not happen very often, but yes, 100%. And if you look at the MACD here, you know, if we get up, let's just say we tested, I can move the bar here. Let's just say we tested the high today like that. We're like a 4 3/4 ATR channel, where the first one was at like an 8. The MACD is only here compared to way up here. The RSI very low compared to what the RSI was here. So there are a lot of divergences happening on TLT, no doubt about it. I think this second move here is even though it's going up, it's not doing so on much momentum. When you short puts and when you say you do normal position size, you mean if put? You mean if put? Yes. Speaking of which, would being put PM at 72.50 be undesirable? So I'm not 100% sure. Let's see. Okay, tell you what, John. We have 3 minutes, so after the market closes, let's unpack what you said there, so I make sure I know exactly what you're asking, so I can try to give you the best answer. Would you being put PM at 72 undesirable? Well, you know, it's lost a lot of its support. It's lost a lot of its technical levels. There's a lot of drama going here with the news. You know, I guess if I thought it was a good idea to be put it here, then I would not have covered my puts. But you know, when you have something big happen like this, I don't want to gamble on it. I just want to get out, take the loss, and move on. All right. So speaking of taking possible losses, Amazon is right there. DDM looks like it's going to be fine. So Amazon, and this is one of those things where we're going to do our best. It may close slightly above, it may close slightly below. We just don't know. So we have 1 minute. Currently it is above. So we know DDM's fine. I mean, I know we're going to buy the SPY at the end. We know DDM's hanging in there. And it looks like Amazon might be closing above there.
Order filled.
All right, it closed
Order
above,
canceled.
so we stayed in Amazon, and then SPY 286.87 is our new fill, 286.87. That wasn't a very good fill. But that is what it is. All right, so the only new position today was the SPY. Did lock in the profits on the VIX. cues are still hanging in there. Philip Morris, so it was good that I got out, did close below. So, all right. So listen, if you guys have any other questions, and I'm going to go over all your comments now, but I just want to put in a quick plug, let everybody know that I do teach private one-on-one lessons in the evening time via Skype. So if you feel like you might benefit from having a lesson with me one-on-one, please reach out to me. My hourly rates are in the description of this video, and then also my email is, and then you can also contact me on Twitter. And just so you know, just basically what happens, it starts with a free phone call. I just want to get to know you better. I just want to learn more about your trading history, how you trade, what your challenges have been, what your goals are, how much time you have available for the screen, kind of your financial situation, and then I'll put together a customized lesson plan for you, incorporating what you told me into a lesson plan that hopefully will achieve your goals. And one of the best things about the one-on-one lessons is that I teach you, but I have you teach it back to me, and that way I know that you know what you're talking about. We go through a lot of charts. I give a lot of examples. I tell you, break this down. What are the pros? What are the cons? So I've had really good success with my students. I've turned a lot of perpetual losing traders into winning traders. So if it's of interest to you, if you've been thinking about it, just reach out to me and we can talk about it. Have that free phone call. And then also, if you wouldn't mind, if you find this channel helpful, I would appreciate it if you would subscribe if you haven't already. Or at the very, very least, if you could hit the thumbs up button, please do that for me. I would appreciate it. It helps get the channel out to more people on YouTube. And a lot of people have problems with trading. It has a negative impact on their life. And the reason I started this channel is to get as many people as possible here to teach them good trading principles. So if you wouldn't mind, if you like the content, hit the thumbs up button and I would appreciate it. So let's go over and see. So John said, when you short puts and you say you do normal position size, you mean if put, yes? Yes. So, when you buy a regular directional stock, just a regular trade, I use 10%, 5% or 10% depending. But on a put, I will also use just a 10% position size, exactly the same. Even though I still have all the protection to the downside, I still use a 10% position size. So if I do get put the stock, then it will only be like having a normal 10% position size. But the way that I trade options is if they expire and I keep all the premium, of course, then I don't have to be put the stock. If it closes under what my strike price was even before the expiration, I never get put the stock. I always just get out of the position. I don't want the stock at that area most of the time. Like with the Philip Morris here, if I would have got put the stock and it was above the 30 and we were at like a third ATR channel and then 200-day moving average, all that kind of stuff, then I might get put the stock and then I might manage it going forward from there. But yeah, to answer your question, 10% position size on my puts as well. So if I did get put the stock, it would be equivalent of me just buying a normal 10% position size. But okay, so speaking of which would being put PM at 72 would be undesirable. Well, I mean, right now it's at a 24.38. You guys know that I wouldn't buy anything at that level. It would have to be above the 30. We have huge bars here. If it would have closed above, yeah, then I probably would have kept it. But this is really, really scary, especially on news like this. So it's, when you get punched in the face, it's better just to get on with it, forget about it, and not battle, because this kind of situation here is where egos come in and you start thinking, I don't think it's going to go any lower than this. Do I think it's going to go lower? I don't know. I never know. That's the point, right? So all I can do is follow my rules. Frederick says, I was wondering if it was hard for you to trade with all these market noises, Trump tweets, etc. So we are learning during tough periods. It's good. Yeah, 100%, Frederick. I mean, there's cycles to the market. Sometimes it's so easy to trade. It's so easy to make money, right? Other times it's so bad that you're not in the position at all. And that's easy too, right? It goes to 29, it goes to 22, it goes to 19 on the RSI. There's no signals there, and that's easy too. But the tough part is when you go under 30 RSI, you go back over the 30 RSI, you get in the position. Then you get a Trump tweet, it goes back down and you get whipsawed. That's the difficulty in trading. So yes, it has been difficult because it's been very volatile. It's been very choppy, ups and downs. You get in, you get out, you get in, you get out. I mean, I can't remember the last time we hit a profit target. It seems like, right? It's been 3-4 days, I think. Other than the S&P, we've done fine on the S&P. But that's just the ebb and flow of the market. And yes, you're right. We are learning at a difficult time here, which is good. If things are just going up all the time, then you just think that happens all the time. It doesn't happen all the time. Things trend about, what percent do they trend? I don't know. 15% of the time, 20% of the time, the rest of it's down or sideways movement. So we're in sideways movement right now. So it is a good time. But again, I know you guys get sick of me saying this, but you never know what's going to happen. And if there's lots of whipsaws, it's important that when you lose small and you position size correctly. Murat says, where does the money go if the momentum in bond is such? Gold and silver? Where does the money go if the momentum in bond is such? Gold and silver. I'm not quite sure I understand that question, Murat. Where does the money go if the momentum in bond is such? Are you asking because we're having lower momentum in bonds why it's still in going up? Is that perhaps what you're asking? William says, hey Greg, thoughts on Oracle eyeing a close above the 200 SMA, also forming a MACD divergence. Should the red bar from Friday be an issue? Let's take a look. Well, in my opinion, the red bar on Friday is an issue because it came on such high volume, closed underneath. But, can you buy it with a close back above the 200? Yeah, you can for sure. And what I like also, we have this previous low over here. We had 1 day down. Not only did we go from under the 200 back over the 200, but we also went back over this previous low. So this area in right here was a false breakout, and we just tested it 1 day. We went back up. Technically there is not a MACD divergence here, William, and the reason why is, I can see why you're saying we have a move down, we have a rally back up, we come back down, but for a real MACD divergence to happen, you need to have red bars, then green bars, then red bars. See how we have no green bars? So this, you have to view this as still just one move down, not a move down and a move back up with enough strength to have some green bars. So, when I first started viewing this with Dr. Elder, I would look at this too and go, okay, this is a MACD divergence. It is slowing. The MACD move is slowing, but it's not a double bottom with a bullish divergence because we didn't have any green bars. But a lot of volume today there. But listen, we did close back up into this previous range. We got on the negative side, we're holding halfway of this bar. But if you're using the 200-day as a stop, I mean, we never know what's going to happen, no matter how good it looks. But it does give a good risk to reward ratio here. If you're wrong under the 200, you're wrong small. If you're right, you may have a potential up. Murat says, or John says, thank you. You're welcome, John. I hope that helped. I don't know if I quite answered exactly what you were looking for. Murat says the volume was not big in bonds. That is correct. Then I thought money, which is supposed to flow into bonds, is turbulent time, should be flowing somewhere else. Then I was asking if it was gold and silver. Oh, I see. Yeah. I mean, let's look at gold's volume. Not that high either. Silver was pretty high. In my opinion, this is just my opinion, Murat, but we're seeing these divergences here on MACD, ATR, RSI, slowing movement back up here on not that strong a volume. So to me, this looks toppy. To me, gold looks a little toppy. To me, well, silver didn't really look that toppy, but gold looks a little toppy, and bonds look a little toppy here. People are still buying them, but I'm not sure it's smart money buying this slowing momentum at this previous high here. I mean, we may go up and test this high. It's probably pretty likely, but in my opinion, the momentum is slowing on this second move up. Frederick says, Greg, is it better to want to catch the top of a trade and sell, or is it better to wait for a down sell and sell? You're talking about shorting, Frederick? I think you're talking about shorting. In my opinion, it's always better to wait for some kind of confirmation that it's going your way. Like, if today's bar had done this, had gone up and tested and then come back down, I wouldn't mind shorting there because it showed me that it got sold into in this area. But shorting is very difficult. But I think the best answer is, don't try to, just like you don't want to catch a falling knife, you don't want to try to catch a rocket knife to the upside either. I would wait for some indication that it's, look, a V1, V2, right? That's exactly what a V1, V2 is. You want the market to test an area and reverse, show that it didn't like it, whether it's to the downside or the upside. But I wouldn't just try to catch something at the top. I would not suggest that. There's only one top, Frederick. There's only one top, there's only one bottom. So what are the chances are you're going to get that day, right? It's better to let it, if you're talking about shorting, it's better to let it go up and show that it has some kind of rejection and it's coming back down, some kind of valid signal, regardless of what kind of trade you take. But just to short strength, just based upon strength only, I wouldn't do it. And that's from experience, Frederick. That's coming from experience. You're much better to wait for the market to confirm that it's rejecting and going back your way. And Murat, Frederick, you were asking today about bought the V1 on 826. Yes, it is a V1, but you see how high it is? We're up above the third ATR channel. I mean, yes, it's good that it closed above the third ATR channel. RSI 74. It can be pretty volatile at these levels. I mean, if you bought this close under 70, that's fine. I mean, at least you have a plan to it. But I don't think, me personally, I would have bought that there. But I hope that goes up for you, my friend. Murat says, I used to short a lot. I am actually better at shorting than going long. In the early days, I used to pull the trigger too early. It was always very stressful for the first 4 or 5 days before the price came down. Yeah, that's my point. You know, stocks can always go higher than you think, and they can always go lower than you think. So that's why I prefer to wait. That's why I prefer to wait for something to show me that if I'm shorting, that it's not going up anymore. Even a V1, V2 at least gives you some kind of plan, gives you some kind of levels. But again, it's very difficult to catch the bottom. There's only one bottom, and the chances of you catching that one day are pretty slim. Frederick says, better to wait for confirmation. Yeah, 100%. To the downside or to the upside. But remember, on the downside, under 30 back over 30, that's a confirmation. Under the 200 back over the 200, that's a confirmation. But you need some kind of plan. You need some kind of structure to your trades. If you just say, oh, I think it's low enough, like Philip Morris, is there any signal there today? I mean, it bounced off the low here, didn't make it back to halfway. There's really no signal there, right? So I would just be guessing. I wouldn't know how to manage this trade here. What would I do? I guess I could say I'll stay in it as long as it stays above there, but there's still a lot of supply coming into the market. We have to wait for the supply to stop. We need to see it stop going down and start going up. Where it says, I've been studying how the algos do the swing shorts. They always start when the downslope matures, in most cases not even close to the top. Let's see. I've been studying how the algos do the swing shorts. They always start when the downslope matures, in most cases not even close to the top. Yeah, it makes sense. They're not trying to pick a top either. Frederick says, yes, like gambling. Yeah, that's all it is. There's a fine line between trading and gambling, right? You have to have some kind of structure. You have to have some kind of indication that something stops going down and starting to go up. Doesn't mean it's going to go up, but it's you have better odds because the market just showed you that it wanted to go down, didn't want it to go down anymore. Now it's starting to go up. And on the short side, if it stops going up and starts going down, now you have a confirmation. But if you just try to short something that's going up and up and up just because you think it's high, it doesn't really mean anything. You have to wait for confirmation. Yeah, this has been tough trading, everyone. It has been tough trading. But these are the times that are going to make you better, stronger traders, as long as you can stick through it, position size correctly, keep your losses small. And it doesn't mean you're not a good trader. If you're sticking with your plan and you're losing money, that makes you a good trader, because it could be a whole lot worse. If you're using too big of position sizes or just trying to stab at things. And by the way, talking about shorting and buying bottoms, the worst thing that can happen to a new trader is that they go, oh, this looks low, and they buy it, and it immediately races up their way. That's the worst thing that can happen to you, because it instills those pathways in your brain and makes you think that this is how it is, right? And it's not how it is. It's very difficult to catch bottoms or tops. And, most professional traders do not try to catch it. They just don't. Beginning traders try to catch things because they look high or they look low. Frederick says, so you would not short my last trade? No, I wouldn't. I wouldn't buy it, nor would I want to short it. It doesn't really give me any indication that I would want to short this, but at the same time, it's too high for me to buy. You know, there's a fine line. Just because you're getting out of something, it's gone your way. Just because you're getting out of something doesn't mean you would want to short it. I mean, on the positive side, this is still above the 30 TR channel. It's above a 70 RSI. MACD is slowing, that is for sure. But it's in an uptrend, right? And I know there's some conflicting things I'm saying here, but it's in an uptrend. So if it's in an uptrend, why wouldn't you want to buy it? Well, because the levels, it's not a good risk to reward level there. You know, this would have been a much better entry point here on this gap, using this low of this gap. I mean, I understand this is in hindsight, but at least it wasn't so far extended. So no, I would not buy the trade here, but nor would I short it. Let's see. All right. Shorting has a limit. You can only make 100% max. Longs can go 1,000. That is true. It's tough. It's tough to short everybody. I mean, I understand it's fun when you hit a short and it goes your way, but you really better make sure that you have a really good plan. There's a lot of things going for longs, you know. The government wants things to go up. The Fed wants things to go up. You know, Steve Burns used to say this and made a lot of sense. You know, there's a lot of strings being pulled to make stocks go up, not down. And they do go down for sure. But in the long term, there's an upward drift to it, right? So you're kind of fighting an inherent upward bias to the market. Hey, Vix Crush, how you doing? Good to see you. Hey, Vix Crush is a good channel. Talks a lot about VIX and options, things like that. I believe, and now I forgot your name. I'm sorry, right off the top of my head, I forgot your name, but I know you were a professional trader, I believe, on the floor. Thank you for coming by today. Appreciate that. I don't know if you're long the VIX, but if you have been, it's been doing well. I just closed out a short, sold some puts on the VIX, covered my position today. Thank you for coming by. It's nice to see you. Frederick says, okay, thanks, Greg, for your point of view. I always think I'm going to miss a big move. I know, but it's better to wait, everybody. It's better to wait till you get some kind of signal. Murat, people like buying stocks, natural tendency to go long. That's true. All right, last chance for questions. Otherwise, I'm going to get out of here and go for a hike. Murat, thank you for coming by, my friend. I'm glad Twitter was up for you today a little bit today. Frederick, good seeing you. Thank you as always for coming. Vix Crush, I apologize that I forgot your name right offhand, but I appreciate you coming by. You guys should check out Vix Crush on YouTube. He has a fun channel there. He has good interviews. And thank you very much for coming by. And John, good seeing you. I hope I answered that question, but appreciate you coming by as always. William, good seeing you, my friend. Let me know what happens with Oracle, if you do anything on Oracle, and say hello to your doggy for me. Stephen Burns, appreciate you coming by as always, my friend. It's always an honor. Thanks for all your input. And if you guys haven't gone to newtraderu.com, do yourself a favor. Steve has, let me just pull that up here. Steve has such a good website, has such good information on here. He has a weekly video newsletter where he does an analysis of the market. He has some really good trading courses. I've taken all of these. He has really good books. So check out newtraderu.com. And at the very least, read these articles. He posts great articles all the time. You can see all these good articles. And then follow him on Twitter at @SJosephBurns. And then we had Roy B. Thank you for coming by, Roy. Appreciate that. So Murat says, I have to tell you this, my BWLPG is up 4% today. Fantastic, my friend. That's the European stock that I can't pull up. Good for you. I'm really happy for you. All right, everybody. Listen, thank you for coming by. Hope you have a good rest of your day. Go out and do something nice for somebody today. As always, it doesn't hurt, makes you feel better, makes them feel better, might brighten their day, and it's going to brighten your day as well. So just go up, do something nice, right? And then we will continue this circus tomorrow, see what the market brings, see if we still just chopping around or if we can get some kind of trend going. Who knows? We have no control over it. All we can do is follow the prices, and it will be what it will be. So, all right. Hope to see you tomorrow during the last hour, and we'll talk to you later. Have a good day, everybody.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.